Hi everyone, Happy New Year. I am Chris, and today we are taking a look inside our portfolio. In this video, I'm going to discuss how we are currently building position in Intel using options, and I'm also going to discuss the recent announcement about Mobileye and how I think this news impacts the story of the business. Sam and I have decided that from here on out, we want our channel to focus on sharing all the things that we're doing to achieve and maintain our financial freedom. So we really hope you enjoy this sneak peek into our investment strategy. Let me start with a little background on our Intel investment. Back in November, Sam walked you through our entire valuation process that we did on Intel and came up with a fair value of around $50 per share. I'll put a link to that video in the description below. Since then, the story has changed a little bit on Intel with the announcement that they will be taking their subsidiary Mobileye public through an IPO. So first things first, what is Mobileye? Mobileye is a company that Intel bought back in 2017 for $15.3 billion that develops technology that's used in autonomous vehicles. This makes it a very sexy income stream for Intel with high growth potential. But that value is often hidden in the much larger, much slower growing core business of Intel. Since 2014, Mobileye has been growing its revenue at about 43% per share, which puts it in line with high flyers like Tesla. So Intel separating Mobileye out through this IPO should unlock a lot of value, as most estimates have the IPO valued at about $50 billion. Considering that Intel is currently priced at about $220 billion, and Mobileye's revenue of $1 billion makes up less than 1.5%, there is a lot of potential hidden value that could be unlocked in this IPO. Now, Intel has said that its intentions are to maintain controlling stake in Mobileye, so they'll be selling less than 50% of the business. But again, if estimates are right, this could net Intel about $24 billion in cash. Intel has recently made it very clear that they are going to be reinvesting large sums of cash back into their core business to grow back their market share. And this $24 billion cash infusion will help them do this without having to dig too deep in the free cash flow that they generate from operations. This will allow them to use their reoccurring free cash flow to continue to pay dividends and buy back shares, which they have done really well in recent years. They've returned over 94% of their free cash flow in 2020 in the form of dividends and share buybacks. So how do Sam and I feel about this Mobileye announcement? Well, generally we feel very positive, though there's a lot of details that still need to be disclosed. The management team is unlocking huge amounts of hidden value, which it is reinvesting into its core business at what should be high rates of return. And this is something that Sam and I love to see, when a company is able to reinvest in themselves and really compound our money for us. So our investment story on Intel has changed a little bit, but we do believe it's changed for the positive. So we're continuing to build a position in Intel as long as it's priced at or below what we would consider fair value. And although we believe this news will positively impact Intel, we are maintaining our fair value of about $50 per share, which we calculated back in November. Time for the question of the day. What do you think about Mobileye going public? I'd love to hear your thoughts, so please leave them in the comment section below. So as promised, I want to detail the steps that Sam and I have taken to continue to build our position in Intel. We bought 100 shares of Intel on the 28th of October for $48.97 per share. We also sold put options with a December 17th expiration date at the following strike prices. We sold 2 contracts at $50 strike prices. We sold 2 contracts at $47.50, and we sold 5 contracts at $45 strike prices. Now, each contract requires us to buy 100 shares of the company at the strike price if the stock is trading below the strike price on expiration day. But for this, we collected a premium of $636, which we get to keep whether we have to buy the shares or not. On December 17th, Intel closed at $50.62. So all of our options expired out of the money, meaning that we didn't get to buy any of the shares. But we did get to keep the $636 a premium that we got paid for selling the put options. And as discussed, the story on Intel has changed, but we do believe in a positive way. So we're continuing to sell put options at strike prices below $50, which we still believe is the fair value for Intel. On December 20th, we sold 3 contracts expiring on January 21st with a $46 strike price, and we're paid $65 per contract, or $195 total. On January 6th, we sold 2 contracts expiring on February 4th. One contract of a $48 strike price, which we got paid $54 for, and one contract at a $50 strike price, which we got paid $90 for. We're doing this to continue to build a position in Intel. It reduces our cost basis, which in turn reduces our risk, and it generates cash flow while we're waiting to buy Intel at a price at or below what we would consider fair value. So how does our Intel investment currently look? We have invested $4,897 to buy our 100 shares of Intel stock. We've also collected more than $1,000 of cash in the form of option premiums and dividends. To be precise, it's $975 in option premium and $34.75 in dividends. On top of this, the value of our 100 shares of stock has increased $498, which equals 10.2%. In the same time, the S&P has gone up 1.6%, so not a bad result in 2 months' time. But this is a long-term position for us. We are hoping that Intel continues to trade around this $50 fair value price that we have put on the business so that we can continue to build our position and reduce our cost basis. All right, everyone, just a disclaimer, I am not a financial advisor. I am certainly not your financial advisor, and this is not financial advice. This is just for information and entertainment. You should certainly do your own due diligence to understand everything that you invest in. All right, everyone, that's it for me. I hope you found this video useful, and thank you so much for watching. Remember, earn more, spend less, and invest the rest, and I'll see you next time.